Great news is rates are expected to keep trending lower, and there are a lot of reasons why. Economist Lacey Hunt released his quarterly report this week, and that showed capacity utilization, which is basically how much of our production capacity the economy is using, and that's continuing to come down, and that's deflationary, meaning it helps bring prices down. Remember, mortgage rates move with inflation. But Hunt also pointed out that this trend is likely going to just accelerate with AI, since automation tends to make things more efficient. But he also talked about growing liquidity issues, and you can kind of think of that like money just not flowing as easily through the system. And we're seeing more bankruptcies, lower credit scores, as well as rising delinquencies. All things that are unfortunately signs that access to credit's tightening, and that's part of why the Fed's considering stopping its balance sheet runoff, which we heard about this week, and that would be really good for mortgage rates. We're also seeing the spread between the 30-year fixed mortgage rates and the 10-year Treasury yield finally start to narrow, and that's a really good sign too, because it means that mortgage rates are starting to move more in line with what's happening in the bond market. Oil prices have also dropped to some of their lowest levels since the pandemic, which helps with inflation as well. And add that to the growing expectation that the Fed cuts are going to happen, with one almost guaranteed at the October 29th meeting, and we've got another one likely in December. But all this kind of explains why rate sheets have been improving, and while the market tone does feel positive, it is built on a lot of fear and speculation. It is not strong economic numbers, so this window of opportunity could change quickly, of course, just like we've seen before. And something interesting I saw was the White House budget director said this week that he intends to shut down the Consumer Financial Protection Bureau within the next few months. And that's a huge statement, and that you can see my friends here in the background. But that could actually reshape parts of the lending and regulatory world if it actually happens. And next week, we're going to get fresh numbers for CPI inflation. We're also going to get mortgage apps and existing home sales, all of which will kind of help confirm whether this improving trend that we've seen in rates has solid foundation. But have a great weekend, and I'll see you next Friday.